Welcome to a special edition of Modern Wall Street. Today, ALPS ETF Trust will be ringing the closing bell here at the NASDAQ market site. So joining me now is Mike Akins, who is the Senior Vice President as well as Head of ETFs at ALPS. Mike, great to have you here today.
Thanks for having me.
Well, first and foremost, you're here to celebrate your relationship with NASDAQ Dorsey Wright, and
Correct.
you do have a sector momentum ETF. So tell me a little bit about that product and the objective.
Yeah, definitely. So the ALPS Sector Momentum ETF, Dorsey Wright Sector Momentum ETF, is designed to basically take relative strength at both the sector and the stock level. So there's a lot of momentum products in the marketplace, but at ALPS we really strive in our factor lineup to really do three things. Take a known strategy, so in this case momentum, relative strength, add conviction, so very concentrated portfolio of only 50 stocks, and then really look at it from a sector perspective and mind our sectors. So the strategy has a constraint to how much each allocation can be across the sectors of the market.
And this product is listed under ticker symbol SWIN.
Correct.
So could you give me an idea of the performance since it just launched earlier this year?
Yeah, so it's a brand new ETF. We launched January 10th. We listed on the NASDAQ, so very short performance. But we've outperformed the S&P by about 100 basis points since inception. So it's doing quite nicely out of the gates. We expect the product to perform very well in cycles like this. It is a momentum strategy. Momentum stocks have been doing very well. But the twist on our product is it is constrained at the sector level. So some momentum strategies are doing a little better. Those are the ones that tend to have 40, 50% in technology. We're designed to be capped at 20%. So we'll lose out a little bit of that when one sector is really climbing in the market on that momentum side. But when it rolls, and it always does roll, we'll have a little more downside protection and hopefully not have quite the drawdowns that you would see in some other type of sector unconstrained strategies.
And Mike, if we take a broader view of market performance this year, we've been seeing plenty of market action, whether we're talking about equities or commodities or the foreign exchange market. So at least for ETFs, what are some of the trends you see in the near term?
Yeah, so from a factor perspective, I think you'll continue to see the strategies grow and gain assets. I think it's really incumbent upon the issuers of these strategies to help the advisors and the RIAs understand how to use them. Because the tricky thing about factors is there's a lot of academic research that shows they've worked over time, but there's also a lot of academic research that shows that factors go out of favor and they can stay out of favor for a long time. So what you really want to do is find the factors that work well together. So at ALPS we believe that value and momentum are two of the strategies that really work well. So the idea of SWIN was to complement our deep value strategies, SDOG, IDOG, EDOG, and really understand that. And you really, this year is a great example of how that's been. You can see how growth is really taken over the marketplace, significantly outperforming the broad market, whereas value is significantly underperforming. So if you were just in one or the other, you'd be having a great year or a really bad year. But if you were blending them together, you can really lower that standard deviation and get the benefits of that alpha potential in certain factors.
Well, last but not least, Mike, I do want to ask you a little bit more about SWIN, which is your product for ALPS ETF with the NASDAQ Dorsey Wright. But I don't want you to list all the holdings for that ETF, but just so people have an idea, can you give us some names? Yeah,
it was some pretty standard tech names like NVIDIA, Apple, a lot of the names that have been really performing well in the technology space. We did just go through a rebalance, and you know, the way the strategy works is we pick the 7 best performing out of 10 GIC sectors in the marketplace. So we just did have one sector change where we took energy out. Obviously energy's been the big trailer year to date. It was a 10%, we had 5 energy names, 10% holding. We just rebalanced out of that into utilities. So right now if you were to look at the fund, we have the 7 of the 10 sectors, we don't have 3 of them, which would be consumer staples, telecom, and energy. And we have participation in the rest of the sectors.
Okay, Mike, well, thank you so much for joining me here at the NASDAQ, and good luck with the closing bell.
All right, thank you so much.
Thank you.